Thanks so much for your interest in Portfolio Architect. Portfolio Architect is a very powerful portfolio analysis tool that will let you optimize your returns and trading strategies. You can import, combine, and analyze your strategy results from one or more platforms. You'll be able to balance and maximize your trading approach for optimal returns. The interface is intuitive and easy to use. You can drag and drop strategy results into your portfolio file panel, review the calculated performance metrics, view the equity and drawdown charts, and check the periodic returns for different time frames. All of the results can be exported as PDF or CSV. There are more technical features like compounding, which simulates the reinvestment of equity back into the portfolio over time. We'll see this used in an example case later in the video. There are also disbursement options, which simulate performance in the case that you would like to withdraw profits at periodic intervals. We'll begin by starting a new project. First, we click the New Project button in the top right-hand corner. Then, we'll change the name of our project to My Example Portfolio. We'll head on over to Global Settings and set the starting equity to something more realistic for the strategy results that we will be importing. Then, we'll open up thinkorswim and generate some strategy results to import to our project. Portfolio Architect also supports strategy results from TradeStation, NinjaTrader 7 and 8, MetaTrader 4 and 5, MotiveWave, TradeTrend Flex Charts, and of course, thinkorswim. We'll get results for strategies applied on the daily chart, hourly chart, and 5-minute chart over the last 6 months. This way, we can simulate a portfolio which incorporates long-term trading, swing trading, and day trading components. We'll use 3 of thinkorswim's built-in strategies: the Hackholt Strat, the Sentiment Zone, and Volatility Band. We apply the strategies to the chart. To export the results, we right-click on any trade on the chart and hit Show Report. Then, we click Export File to save as CSV. We'll call this first file for the strategy applied on the 1-hour chart 180-day 1-hour results. We'll then repeat the process for the other 2 time frames. Now that we've exported some strategy results from thinkorswim, we can import them to our example project. This can be done by dragging and dropping the strategy result files individually to the portfolio file panel, or by bringing them in as a group. Results can also be imported by right-clicking on the portfolio itself and clicking Add File. Now that the strategy results are successfully imported, we can take a look at the generated metrics. When navigating portfolio metrics, we can use the Stretch and Maximize buttons to reposition our windows for convenience. Clicking the Stretch button will double the width of a window. Maximizing it will allow it to take up the full space. The other windows are repositioned accordingly. All of the calculated metrics in the master portfolio combine the data from the 3 sets of strategy results that we imported. In the Overview tab of the Performance table, we can view statistics such as the net profit and profit factor, drawdown, the number of total and profitable trades, as well as the number of winning, losing, and even trades, and the Sharpe and Sortino ratios. In the Return tab, we see our portfolio's average monthly and average yearly return. Finally, the Distribution tab shows us valuable statistics about how our returns are distributed, such as the average trade return, the average winning and losing return, the ratio of wins to losses, and other useful information. In all 3 tabs of the Performance table, the metrics are split into 3 columns: for total trades, long trades, and short trades, allowing you to see the split in your performance by position type. The equity and drawdown charts let you visualize the progression of your starting equity and drawdown over the course of your portfolio's runtime. The periodic returns window has some very useful features. The hourly returns show the total return for each hour of the trading session summed over the entire strategy's runtime. For example, we can see that our portfolio made the best returns on trades taken at 8, 10, and 11 a.m., and the worst returns on trades taken at midnight. The weekday returns tell us the total return for each day of the week, summed over the portfolio's runtime. We can see that our combination of strategies performed best on Wednesdays and worst on Thursdays. The monthly and yearly returns show us the total return for each specific month or year traded in the portfolio. We'll start a little case study with the results we took from thinkorswim. We'll split our master portfolio into 3 sub-portfolios, one for long-term investment, one for swing trading, and one for day trading. We'll then see what kind of useful information we can gather that can help us analyze and increase the profitability of our strategies. We'll start by going into global settings and switching to the light theme for a change of pace. Next, we'll create our 3 sub-portfolios. We click on the New Portfolio button and rename this first sub-portfolio to Long-Term Portfolio. We'll call our second sub-portfolio Swing Trading Portfolio, and our third Day Trading Portfolio. We'll then drag our long-term results from the daily chart into our long-term portfolio, our hourly chart results into our swing trading portfolio, and our 5-minute chart results into our day trading portfolio. The results are now separated into our sub-portfolios, and we can begin to look at them independently. Looking at the overviews for our 3 sub-portfolios, we can see that the swing trading portfolio presents the highest net profit, the highest proportion of profitable trades, and the lowest drawdown for both long and short trades out of all 3 portfolios. We might like to check how compounding our profits back into the strategy would affect our swing trading performance. Applying compounding in this case generated about 8% more profit. While our day trading strategy generated a net loss, we can look in our performance and returns for information to help us improve our approach. For example, we can see that the majority of our day trading losses are incurred by trades taken on Mondays. As these results are summed over 3,000 trades, the statistic may highlight a pattern that will continue going into the future. Were we to avoid day trading on Mondays entirely, our loss of 32,000 for this sub-portfolio would be converted to a gain of about 138,000. Again, drawing insights from the periodic returns, we can note that the majority of our profits in both the day and swing trading portfolios occur between 8 a.m. and 2 p.m. This is another good example of valuable information that can help us improve our trading approach. While we've only covered a few basic examples of how Portfolio Architect can help us to optimize our portfolios, we've seen that we can identify the strong and weak points in our strategies and draw insightful conclusions just by simple inspection. We hope you've enjoyed this demonstration and would like to thank you for being a part of our community of traders.